Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about the Russian ruble. The commonly accepted principle in economics is that when your currency is doing well, that's a reflection of your economy. So when your currency is strengthening, your economy is on the up. However, when your currency is weakening, that indicates that your economy is going down. And following the recent military coup attempt by the Wagner Group, the Russian ruble has hit its lowest level against the US dollar for 15 months. However, if we exclude the crash in the value of the ruble that was experienced directly after Russia invaded Ukraine, the current rate of exchange is actually the lowest ever in Russia's history. So in today's video, I want to investigate exactly what's going on. So we'll have a look at what's been going on with the exchange rate against the US dollar and the euro, which historically were the two most important currencies for Russia. We'll also have a look at the exchange rate against the Chinese Yuan and the Indian Rupee, because as you'll be aware if you follow the channel, Russia has recently pivoted. It's moved away from dealing with the West and selling a lot of oil and gas into Europe, and it's now looking to increase its relations with the two biggest countries in the world in terms of population, China and India. We'll then go on to have a look at what's going on with Russian trade and particularly Russian oil, because the demand for Russia's products has a direct link to both the demand for Russian ruble and the value of the Russian ruble. We'll then go on to talk about Russia's reserves, and then finally today I'll wrap up with my summary as to what I think is going on with the Russian ruble and what the implications of this are for the Russian economy. This chart shows the movement in the exchange rate between the US dollar and the Russian ruble over the last 12 months. And as we've discussed before, when we're looking at exchange rate charts, you generally talk about the strongest currency first, and one US dollar is worth significantly more than one Russian ruble. So the overall takeaway from this chart is that over the course of the last 12 months, the US dollar has been strengthening, because you can see the graph going upwards, which means on the reverse side of life, the Russian ruble has been weakening. 12 months ago, one US dollar was trading for around 53 Russian rubles. Today, it is more than 85. And you can see from the shape of this chart that we have seen a consistent decline in the value of the ruble over the last 12 months. And if we expand the chart to show what's been happening over the last 5 years, you can see that following Russia's invasion of Ukraine on the 24th of February 2022, there was a crash in the value of the ruble. And at one point, one US dollar was trading for more than 125 rubles. However, that crash was subsequently reversed for two reasons. Firstly, the Russian central bank stepped in and was buying rubles in the international market to bring the price back up. And secondly, the global market for Russian rubles shrank significantly as a result of most countries from the West applying financial sanctions against Russia and therefore no longer wanting to buy rubles. So we had a much smaller market which the Russian bank was able to control, and by July 2022, one US dollar was trading for around 50 Russian rubles. However, over the course of the last 12 months, as a direct result of the Russian economy recording deficits and losing a lot of trade, the Russian central bank has stopped supporting the Russian ruble in the international markets, and we have seen a significant deterioration in the value. So the period between March and July 22 can be regarded as quite exceptional. But if we look at what's been happening over the last 5 years, you can see there has been a long-term decline in the value of the ruble. 5 years ago, one US dollar was trading for around 62 rubles. And if we expand the graph out further to show what's been happening over the last 25 years, you can see that there has been a significant decline in the value of the ruble. 25 years ago, one US dollar was trading for around 5 Russian rubles, which means that over the course of the last 25 years, the value of the ruble has fallen by around 17 times. Now, you may be sitting there thinking, well, does this really matter? Is Russia concerned about the exchange rate against the US dollar? Because it's no longer doing significant trade with the USA and therefore doesn't really need to worry about exchanging rubles for dollars. However, Russia does need to be concerned about the exchange rate against the US dollar because the international market for oil and gas and other commodities is benchmarked predominantly in US dollars. So that means that when Russia is striking trade deals, often the reference point will be US dollars, and Russia will often be paid in US dollars. And on the reverse side of that equation, when Russia is buying things that it needs to import, those prices are also benchmarked in dollars. And that means that the cost of those imports is going to rise significantly for consumers in Russia, as they will have to pay a higher amount of Russian rubles for each of those products. And I think what's really interesting about the exchange rate between the US dollar and the Russian ruble is that the Russian central bank is no longer focusing on trying to keep the rate at a desired level. It's letting it float freely. And what we're seeing from that dynamic is that the ruble is deteriorating against the value of the dollar, which could potentially indicate that the Russian economy is performing badly. This chart shows the exchange rate between the euro and the Russian ruble over the course of the last 12 months. And the euro is the currency that's used by around 20 countries in the European Union, including some of the largest economies in the world, such as Germany, France and Italy, and also the Netherlands, which is a really big player in the international market for oil and gas. And the overall summary of this chart is exactly the same as the chart that we've just looked at for the US dollar. Over the course of the last 12 months, we've seen a strengthening of the euro and a corresponding deterioration in the value of the Russian ruble. 12 months ago, €1 was trading for around 55 Russian rubles. Today, it's trading for around 92. And that represents a fall in value of the ruble of around 67%. If we expand the chart out to show what's been happening over the last 5 years, you can see that we've got exactly the same dynamic as what we've just looked at for the US dollar. The crash in the value of the ruble occurred immediately after Russia's invasion of Ukraine, was virtually against every currency in the world. So you can see that at one point €1 was trading for around 140 rubles. We then saw the same bounce back when the Russian central bank stepped in and started to support the ruble, and also we saw a large deterioration in the size of the market as the European countries decided that they no longer wanted to deal with Russia. However, over the course of the last 12 months, as the market has moved towards a free float, we've seen a deterioration in the value of the ruble. And once again, if we exclude the crash that happened directly after the invasion, you can see that the current exchange rate is on par with the lowest point that the ruble has been trading at over the last 5 years. And if we expand the chart out further to show what's been happening over the last 25 years, you can see that there has been a significant deterioration in value. 25 years ago, €1 was trading for around 6 rubles. Today, it's trading for around 92, which represents a deterioration in value over that period of more than 15 times. Now, prior to Russia's invasion of Ukraine, Europe was the single largest market for the sale of Russian oil and gas. Russia actually built pipelines delivering oil and gas directly to a variety of different countries. This was a complete cash cow from Russia's perspective. However, unfortunately for Russia, the vast majority of European countries have now stopped buying all Russian oil and gas, and that's led to both a major fall in sales and also a huge drop in the demand for rubles, which is reflected in the current price. And one of the reasons that the exchange rate against the euro is important to Russia is that, generally speaking, the contracts that it was signing that weren't in US dollars were quoted in euros, because it's the second widest used currency in the world in terms of the number of countries that are using it. And also, Europe is on Russia's doorstep. And despite the sanctions, Russia is still importing a lot of goods from Europe. And those goods are becoming increasingly more expensive to Russian consumers, because €1 is now trading for a lot more rubles than it was this time 12 months ago. This chart shows the exchange rate between the Chinese Yuan and the Russian Ruble over the course of the last 12 months. And once again here, you can see that there's been a significant decline in the value of the ruble. And I think what's interesting about the shape of this chart is that the rate of decline has actually picked up pace in 2023. 12 months ago, one Chinese Yuan was trading for around 7.8 Russian rubles. And interestingly, by the end of November, the exchange rate was running at around 8.2, so no real change. However, over the course of the last 7 months, the exchange rate has fallen from 8.2 to 11.8, which represents a decline in the value of the ruble of almost 44%. And if we expand the chart out to show what's been happening over the last 5 years, you can see that the shape of this chart is virtually identical to what we've just seen for the US dollar and the euro. There was a massive fall in the value of the ruble immediately following the invasion, and at one point, one Chinese yuan was trading for around 20 rubles. We then saw the bounce back as the Russian central bank stepped in, and then over the course of the last 12 months or so, we've seen a significant fall in the value of the ruble. And if you look at what's been happening over the last 5 years, you can see that the current exchange rate represents the lowest value of the ruble at any point. And if we expand the chart to show what's been happening over the last 25 years, once again, this is the same shape that we've seen before. 25 years ago, the Russian ruble was actually stronger than the Chinese yuan, and one Russian ruble actually equated to 0.43 Chinese yuan. So that means that over the course of the last 25 years, the Russian ruble has reduced in value by more than 26 times against the Chinese yuan. And I think this value analysis is really fascinating because there has been a lot of talk about Russia getting closer to China, developing trade alliances in the East, which could rival all of the West. And in the early part of the war, the message that was being received was that Russia was going to be the dominant partner and that a lot of trade was going to be done in the Russian ruble. President Putin wanted to establish the ruble as the new petrocurrency. Currently, everybody looks to the US dollar when they're doing trade in oil and gas, but President Putin wanted to change all of that so that everybody would start benchmarking in Russian rubles. However, the reports in the media are stating that China wasn't really up for that, and the deals that are being struck between China and Russia are actually being benchmarked in Chinese yuan. So what that means is that rather than China paying in Russian rubles or US dollars, they're actually settling all of their debts in Chinese yuan. So Russia is now building up large reserves of yuan, which it's now using to pay for all of the imports that it's buying from China. So this is great from China's point of view, and you can see that in these charts. We're seeing an appreciation in the Chinese yuan, but it's bad news from Russia's point of view because it means that all of the increased demand for oil coming from China isn't being reflected in an increased demand for rubles, and that means that the value of the ruble is deteriorating. This chart shows the movement in the Indian rupee against the Russian ruble over the course of the last 12 months. And this is a really interesting chart because 12 months ago, the Russian ruble was stronger than the Indian rupee. At that point, one Russian ruble was trading for 0.66 Indian rupees. However, today the position has reversed and one Indian rupee is now trading for 104 Russian rubles. And if you have a look at the overall shape of this chart, you can see that it's very similar to what we saw for the US dollar, the euro and the yuan. The Russian ruble has deteriorated in value over the course of the last 12 months by around 54%. However, similar to the situation with China, we've seen an acceleration in the deterioration of the value over the course of the last 6 months or so. And that's really interesting because that has been the period where there's been a huge increase in trade between the two nations. And if we expand the chart out to show what's been happening over the last 5 years, you can see that it's identical to the previous charts we looked at. There was a crash in the value of the ruble immediately following the invasion, and at one point one Indian rupee was trading for around 1.65 Russian rubles. We then saw a recovery as the Russian central bank stepped in and started buying rubles. However, once we've moved back to a free float, we've seen a fall in the value of the ruble. And once again, the current exchange rate represents the lowest point that's been seen at any time in the last 5 years. And if we expand the chart to show the last 25 years, you can see that the shape is identical to the previous versions. And 25 years ago, one Russian ruble was trading for 0.14 Indian rupees. And once again, I think this analysis is absolutely fascinating because it's very similar to the situation with China. In the early stages of the war, Russia made it clear that it wanted to sell more oil directly to India, and India was very keen to take advantage of the discounts that were being offered by Russia. So over the course of the last 12 months, we have seen huge volumes of oil being traded between the two countries. However, the problem from Russia's point of view is exactly the same as what happened with China. India did not want to deal with Russian rubles, so a lot of the trade has been done in Indian rupees. And the problem from Russia's point of view is twofold. Firstly, doing all of the trade in Indian rupees means that there's no increase in demand for the Russian ruble, and you can see that reflected in the fact that we've had a huge deterioration in the value. But secondly, from Russia's point of view, it's building up large amounts of Indian rupees. And unlike the situation with China, Russia does not import large volumes from India. So it's building up a large surplus of a currency that's not really used by a lot of other countries. It's not freely traded. And the longer that this situation goes on, the more it's going to cause Russia problems. So although there's no doubt that Russia has increased its trade with India, the value of that trade to the Russian economy is relatively limited. There are a variety of factors that influence the exchange rate between two currencies. However, one of the biggest factors is trade. If a country is exporting lots of products, then generally speaking there will be demand for its currency, and so the value of that currency will rise. And as I'm sure you'll be aware, Russia is a net exporter. It has lots of valuable raw materials that the rest of the world want, such as oil, natural gas and wheat, and historically there was strong demand for Russia's goods. However, as you'll also be aware, as a result of Russia's invasion of Ukraine, a lot of countries that were previously buying Russian products decided that they no longer wanted to continue with that trading relationship, and sanctions were applied against the Russian economy. And the sanctions have therefore had a huge impact on both the demand for Russia's products and the value of the ruble. And the single biggest product that Russia exports is oil. This chart plots the value of Russian oil shipments dating back to January 2022. So this is just oil that's transported over the sea, so it doesn't include the pipelines that supply oil directly from Russia to China. And in terms of the colours on this chart, the light blue section, which is the largest on the left-hand side of this chart, represents sales to the European Union. The yellow section represents exports to Egypt. The orange section exports to India. The grey section is a collection of other countries, including shipments to China, which is one of the biggest buyers of Russian oil. The green section at the top are exports to Turkey, and no details have been provided for the dark red section at the top. So if we start off by looking at the overall trend, you can see that there was a large increase in the value of Russia's exports in March 2022, which was driven by the huge increase in oil prices at that time, following Russia's invasion of Ukraine, when there was extreme turmoil in the markets. The total value of Russian oil exports then fell in April, when a number of countries came out and stated that they would no longer buy any Russian products. However, due to the combination of rising oil prices and the reality of actually dealing with the practicalities of stopping buying Russian oil, the value of Russian oil exports actually started to increase again up until the middle of July. However, between July and October, the total value fell as oil prices started to come down and more countries stopped buying Russian oil. We then saw a spike in the value of Russian oil exports in November, which was just prior to the European Union introducing an outright ban on the 5th of December. A lot of countries decided to take the last chance opportunity to buy cheap Russian oil to stock up. We then saw a dramatic fall in the value of Russia's exports in January as that ban kicked in, and over the course of the last 4 or 5 months, the total value of Russian oil exports has increased again as Russia has managed to find more trading partners. However, if we take a step back and look at the overall trend of this graph, you can see that it is predominantly downwards. If we look back to the situation in March 22, there is a distinct trend downwards in terms of the total value of Russian oil sales. And if we now look at the breakdown by region, you can see that in the first quarter of 2022, by far the biggest customer for Russian oil was the European Union, which represented around 2/3 of all sales. And at that time, countries such as India and Egypt represented a very small percentage of Russia's oil exports. However, if we now look at the situation today, you can see that there are virtually no exports to the European Union, and India and Egypt, and also China, which is represented in the grey section of this chart, have become the biggest buyers of Russian oil. And if we have a quick look at this chart, which plots the value of Russian oil exports for refined products, so this is diesel and gasoline and anything that's been through the refinery process, you can see that it follows a very similar trend to what we've just seen for crude oil. There was an initial spike in the value of Russian refined products in March 2022. However, since that time, there has been a distinct downward trend in the value. And in terms of the breakdown of who Russia is actually selling refined oil products to, you can see that once again in the first quarter of 2022, the European Union was the single largest buyer, equating to around 3/4 of all sales. However, following the European Union ban on refined products that was introduced on the 5th of February, the value of sales to the European Union has dropped dramatically. Now, interestingly, when we look at this chart, there hasn't been a dramatic increase in the volume of purchases from India or China. And the reason for that is that India and China have their own refineries. They can refine crude oil and convert it into diesel and gasoline and whatever's needed for their markets. And so they would rather buy crude oil and put it through their own refinery process because firstly, it's cheaper to buy crude oil. And secondly, having a refinery business in your own country generates employment and profit for your country. So China and India simply don't have the same appetite for refined products that they have for crude oil. And this represents a variety of problems for Russia because refined products are higher margin, so they're making more profit on them, so they're more valuable. That's what they actually want to be selling rather than the crude oil. And also the refinery business in Russia is a huge industry. Russia has around 30 mega refineries, which employ lots of people and generate revenue for the Russian economy. So the loss of refined oil sales is actually hurting Russia more than the drop in crude oil sales. And this chart plots the price of Russian crude oil dating back to January 2022. And the reason that this is important is that the demand for Russian ruble is a combination of the volume of oil, but also the price of oil. And what you can see from this chart is that over the course of the last 18 months, the price of Russian oil has fallen. There is a significant downward trend in this chart. In the first quarter of 2022, the price of Russian oil rose from around $75 per barrel to around $120. However, today the price of a barrel of Russian oil is trading for less than $60. And the reason for that price fall is twofold. Firstly, there has been a general fall in oil prices over the course of the last 12 months as the global economy has slowed down and therefore demand for oil has fallen. But secondly, the price of Russian oil is also trading at a discount to the general market price of crude oil as a result of the sanctions that have been applied against Russia, limiting the markets that it can sell into. So in terms of the overall summary here, the demand for Russian oil has fallen as a result of the sanctions, and the price of Russian oil has also fallen. So the combination of those two factors means that there's been a fall in demand for the Russian ruble. The success of the Russian economy and the value of the Russian reserves are really important and have a direct relationship to what's happening with the Russian ruble. Immediately following the invasion of Ukraine, the Russian authorities took the decision that they wanted to support the value of the ruble in the international markets, and therefore they were happy to use some of their reserves to go in and buy rubles to keep the value strong. However, in the summer of 2022, the Russian central bank decided that it no longer wanted to pursue that strategy, and as a result of falling demand for oil and gas products, we saw a fall in the value of the ruble. Now, one of the reasons that Russia is currently struggling to support the value of the ruble is that the Russian economy is doing very badly. Now, as we've discussed in other videos, Russia does have significant reserves. Prior to the invasion of Ukraine, Russia was holding around $150 billion in its national wealth fund. However, in 2022, the Russian economy recorded a deficit of $48 billion, and now in the first quarter of 2023, they've recorded an additional deficit of around $30 billion. So those two deficits combined equate to around $80 billion, which is more than half of the national wealth fund at the start of the war. So Russia is seriously depleting its reserves right now. And that's one of the reasons that the central bank no longer wants to support the Russian ruble in the international markets, because it's trying to reserve all of its cash to fund the losses that the economy is making. So the last thing that it wants to do is waste further money supporting the ruble when it doesn't really have the capacity to do that. And if Russia continues to experience deficits at the same rate that it's experienced over the course of the last 12 months, it's likely that by the end of 2023, the Russian economy will have run out of cash. Now, as you'll be aware, Russia does have around $300 billion worth of assets overseas, but those assets have been frozen. At the start of the war, those assets that were held in countries such as the USA, the UK and France were all frozen, and Russia does not have any access to those assets. So the losses that the Russian economy is experiencing right now are starting to cause them major problems, and that is one of the reasons why we've seen a significant deterioration in the value of the Russian ruble. So what's the summary and conclusion today? Well, I wanted to post this video really to give you an update as to what's happening with the Russian ruble, because as I mentioned right at the start of the video, the commonly accepted principle is that what's happening with your currency is a reflection of what's happening in your economy. And what we're seeing right now is a huge fall in the value of the Russian ruble. So when you apply that principle, that tells us that the Russian economy is also in decline. And I wanted to go through a variety of currencies today because it's far too easy when you're talking about exchange rates to only look at the US dollar. Now, undoubtedly, the US dollar is one of the most important currencies in the world. And historically, it's been really important to Russia because oil and gas deals have been benchmarked in dollars. However, Russia is now doing everything within its power to move away from benchmarking its deals in US dollars. But one of the problems from Russia's point of view is that the international markets are still using the US dollar as the benchmark currency. And that's hurting Russia in terms of all of its imports. Russia has to import lots of different products, and all of those products are now becoming more expensive for Russian consumers because the value of the ruble has fallen. And so when they're buying something that's priced predominantly in US dollars in the international markets, it's costing more and more rubles on a monthly basis. And I think that does throw up an interesting question, because usually in circumstances like this, where we have a country whose currency is devaluing, we see high levels of inflation in the home market because they're having to buy in things that are getting more and more expensive. However, Russia's current official rate of inflation is incredibly low. The official rate in May was 2.5%, it was 2.3% in April, and 3.5% in March. And if we compare the latest rate of 2.5% against the other countries in the G20, the only two countries that have a lower rate are China, which is currently going through its own problems. It's actually experiencing deflation, so prices are going down, which has its own implications. And the other country that has a lower rate is Switzerland. And the rate of 2.5% does stand out as being questionable, because when you compare it to 4% in the United States, 4.4% in Canada, 6.1% in the euro area, and 8.7% in the UK, it doesn't really make sense given the fact that the ruble is deteriorating in value so significantly, and Russia is totally dependent on imports for a variety of its needs. However, let's put a pin in the question of what's going on with inflation in Russia and get back to the currencies. As we saw today, the value of the ruble has fallen against the euro, which historically was also very important to the Russian economy due to the fact that a lot of oil and gas was being sold into the euro area. However, I think the most fascinating piece of analysis that we've looked at today is what's happening with the exchange rate of the Chinese Yuan and the Indian Rupee. There has been a lot of talk over the last 12 months or so about Russia increasing its level of trade with both of those countries. And it was expected by the Russian authorities that this would put Russia into a position of strength. It would be able to sell large volumes, it would be able to recoup lots of capital and build up its reserves. But what we've seen from the analysis is that the value of the Russian ruble has crashed against both of those currencies over the course of the last 12 months as a result of the fact that the trade that's being done is being done in their currency, not in Russian rubles. And that means that there's virtually no demand for Russian rubles. There are very few countries in the world who are actually paying in rubles and therefore need to buy them. And on the reverse side of things, the level of trade that's being done is actually having an appreciative effect on the Chinese Yuan and the Indian Rupee. So inadvertently, Russia is helping the Chinese economy and the Indian economy at the expense of the Russian economy. Now, as we saw from the other analysis that we went through today, the level of trade that Russia is doing across the board has gone down. The Russian economy is suffering at the moment. It posted a huge deficit for 2022, and so far in 2023, we've seen an enormous deficit. So Russia is really struggling right now, and what that means is that it's having to rely upon its reserves. And as we saw from the analysis, those reserves are finite. A lot of the international reserves got frozen at the point when Russia invaded Ukraine, so it no longer has access to all of that cash that's sitting in international bank accounts all around the world. And so it's having to rely upon the reserves it can access, and those reserves are dwindling. Every time Russia records another loss, another deficit, it's having to use the National Wealth Fund and other reserves to fund that. And if Russia continues to post losses at the same rate that it is currently, at some point those reserves will run out and Russia is going to become bankrupt. So hopefully you found today's episode useful, informative and thought-provoking. I'll keep you posted on any further news and developments on the Russian ruble or anything else relating to the Russian economy. If you've liked what I've said today, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.